All right, everybody, welcome back. We're going to do our market review for Thursday. Again, this is being recorded on Saturday, the 27th. We're looking at the 25th of Thursday, 25th of September, which happens to be a Thursday. All right. So let's get to it. Let's market replay this right quick. This is where we were at after Wednesday. This is where Wednesday landed. We took out this low and we respected this fair value gap, and we retraced back and we didn't close below this low, which is a good sign for buyers, but doesn't necessarily mean that we couldn't also anticipate shorts to the downside for Thursday, even if Wednesday closed like this. So if we go to the 4 hour, every time you take a swing low out or a swing high out, typically there's a rejection that comes out of it. It may not always necessarily mean that it's a reversal, and I mentioned this last time. We talked about this in the market structure video, but there's usually some sort of retracement, especially if it's a decent swing low that's being taken out, right? So if we take that down, we're going to wait for a close below, and then we're going to wait for them to go back inside of this range before they go short, if there is an interest to go short. As you already know, spoiler, it was a short day on Thursday, so that's not going to be any surprise to you. Let's go. Okay. Respecting this fair value gap, we did not close above this low, and in fact these two candles, even though the highs took out the low of this fair value gap, they didn't close, as you can see, right? Let me just put a line. See how they didn't close? If we had a green solid candle that closed above this, we would maybe think differently about this reversal possibly. But since they both did not, then we can consider shorts. Okay. Look at the 1 hour. Again, a lot of this happened overnight. A lot of this movement short was overnight. So we missed a lot of this movement actually. This is a 9 a.m. candle. We dipped a little bit. Seems like we were trying to address this swing, and we took the low of it before we decided to go back up. So that's nice that our swing lows and highs are being respected. Let's see what happened afterwards during the day. Okay. This swing right here is a significant swing that we saw taken out ferociously with this strong green candle. And so what we would expect as buyers after we've taken a swing low right here, let me just add, after that low had been taken, which by the way, we didn't close below it, which is again another confirmation that there's a possibility that we might want to reverse up. Even if we do, usually the first leg is not the leg that we want to be a part of. Usually it's the second leg. We just want to wait for a swing range to be taken out with a really strong candle. and then we want the retracement to come back into the 70% or the 50%, ideally 70%. If you see that on the lower time frame, we go to the 5-minute now. On the 5-minute, we also had another swing right here that we came in and hit the 50%, a little bit more than the 50%, probably closer to the 70. So we had a bigger swing that we took out, but there was a smaller swing that we also created on the way up. So typically when you have bigger swings, it's easier to refine where your interest is going to be to a smaller area that is within the bigger area, right? Going back to that inception idea that we talked about in the previous video for the market structure, where I mentioned that, like, you know, the market is fractal. Ooh, not that one. The market is fractal, which means oh God, I did not mean for that to be big. Whatever happens on the 15-minute also happens on the 5-minute, right? What also happens on the 1 hour also happens on the daily, right? Right? So you can imagine that all these circles are designed in the same fashion. And so if you imagine this bigger circle to be this big swing, the insider circle could be representative of this smaller swing, right? And so if you're trying to find a more accurate location of where you should be looking at for entries and exits and things like that, I'd recommend you first identify the bigger swings and then find the smaller swings on the lower time frame to see if you can get an even cleaner entry. So if we go back to the 1-minute right here, right? Look at that. There's another swing right here. Look at that. A swing. So now we started with the first top circle. We went into the second circle with this swing. Now we've gone down even further to the smaller swing right here that was created. And you see how price goes back to it because it hadn't been retraced into after it got broken up with this green candle, right? Closed. So technically, if we look at the swing, right, we had this green candle that took out the high of it, but it didn't close above, which means that's not the candle that lets us know that that's the shift in market structure, right? You want to wait for a candle that closes with a strong body, and that's the second candle that does it. And so since we didn't have any other candles that came back inside of this range afterwards, it wouldn't be a bad idea to expect that price could possibly come back down to that range, and it does. So if you were looking to long this, which by the way I wasn't available to trade this, you would have taken, honestly, that's not a bad trade right here. That would have been a 4R trade, which means you would have risked 24 points in order to see if you can make 106 points, right? So a decent amount of gains with this move that you could have gotten on Thursday. I actually think that that's probably the best trade of the day, in my opinion. Outside of these shorts right here, I was looking at the price in the morning right here, wondering if this leg up would take us back up higher, but we started shorting. And the trade that I actually took before I was done for the day was this. Let me first identify the swing that I was looking at. And so this swing right here got taken out with this candle right here to the short side. After it got taken out, obviously, since it's a swing, I'm always going to expect some sort of like retracement into the zone. And so if we look at, let me get that even better. We got a move up that goes exactly into the 70%, which is perfect for my entry. And so my trade was a short right here. As the candle came down over the top of that black candle, and then I aimed these lows right here. Now again, like I was saying, I would have preferred to take this trade. I just wasn't available for this trade. I was at work. But this trade was great because I started to see that these shorts were starting to become, especially if you looked at the order flow, very, very consistent to the downside, especially after this move in this consolidation period was done. Everything after that was a little bit more consistent, of course, until you got here, which is irrespective of the swing lows that have been taken, right? So it's expected. So it was a very good trendy day, I would say. Even this right here was a nice swing. It just would have been, I wouldn't say aggressive, but you would have had to have been really ready for this one, right? Take out this green candle. And could have aimed for this, or conservatively for this, or conservatively for this. Honestly, I think this one is probably a better place to get out, just because of how nicely it retraced back, and because we took out a really nice swing low on the left side on the higher time frames. So let's go and see what that was. Okay, so look, we came back to address this swing right here. And we took the 50%, didn't close below it, and we bounced. So when you see something like that, you can kind of trust the trade that you can take right here. Let's go to the 1 minute, it's a little cleaner. You can trust this long, especially if you put on small risk, because the RR is just next level right here. And honestly, you really could have gone up until these highs, but even if you were conservative to these highs or to this high right here, you would have been pretty good. 7R, if you're willing to lose 13 points in order to make 100 points, that's a pretty good, decent day. So yeah, there was really a lot of opportunities. I wish I was awake for this. I was not. I showed up sometime around here, around this consolidation, and I was kind of looking for longs because, you know, we came up really, really well, especially order flow was really nice. But the more we just kind of slowly grinded down, and the way we kind of just flushed down with this leg right here, I was kind of then changing my bias for the short side, especially because throughout the whole day we were just short, right? Like the whole day prior to market open for New York had just been bearish. So I didn't really have any reason to not be bearish anymore. I was just kind of following order flow after market open for New York. So yeah, that was Thursday. It was a really good day, really good momentum day. Really good green day, I would say, too. I remember for me. I'm gonna go ahead and talk about Friday in a different video. Friday was not a great day. It was too much chop. It was the last day of the week. People weren't really trading. And honestly, it was a waste of time. I think I made money, but yeah. And I also lost money. So I made money in some accounts and lost money in some accounts, but it wasn't worth it. Really, my point. As you can see, it was just, I missed this. I missed this move right here, this range. And I was trying to see if we would break these highs around this part, but I got stuck in here. That wasn't fun. But yeah, so that's it for today. Hope you learned something or it was helpful for you. I definitely felt like I could have capitalized a little bit more on Thursday because you can see the range was just nice, up and down really nicely, especially after we came down short. It was a beautiful day. All right, until the next time, I will see you. Take care. Peace out. Have a great weekend. Peace.